We heard some surprisingly positive stories from the big national banks earlier this week and today, and particularly from Bank of America yesterday and Citigroup today. How about some of the fast-moving, more regional players? Okay, just this morning we got results from BB&T, the very well-run regional bank, heavily concentrated in the Southeast, sports a juicy nearly 3% yield. Here's a company that's been making a series of smart acquisitions. Back in August, we learned that BB&T is buying National Pen Bank, $1.8 billion cash and stock, something that will bulk up their presence in the Mid-Atlantic. This news came right after BB&T closed on its purchases of Susquehanna and Bank of Kentucky. It's almost as if this regional bank is using this moment where rates are low, but the economy's getting better to start expanding across the rest of the country, building a more than regional footprint. Now, when BB&T reported this morning, the company delivered a 3-cent earnings beat off a 67-cent basis, higher than expected sales, increased by 6.6% year over year, and organic loan growth of 3.2%. Hey, that's one of the reasons why the stock rallied, but the whole cohort went up. Of course, BB&T is still only a couple of points above its 52-week lows, and at these levels, it trades at roughly 1.6 times the company's tangible book, which is a little more expensive than some of the big ones, but not that expensive that you want to shy away from it. Let's check in with Kelly King. He's the chairman. Find out more about the quarter and where his bank is headed. Mr. King, welcome back to Mad Money.
Thanks, Jim. Thanks for having me.
All right, first, congratulations. You had the fastest growth of all the banks that I follow. But are you surprised by the general action in all the banks today, including banks that had much slower growth than you had?
Well, I wasn't really surprised, Jim, because I think the lead up into the announcement period was pretty much downbeat. I mean, I think there's been a lot of conversation about the economy, and I think that translates over into, well, the banks are going to have a bad time. And as you know, there's a lot of talk about the largest banks around trading income, and so I think there was kind of a general lackluster view. And while all of our earnings are not fantastic, they are a lot better than I think people thought, and so you're getting a positive kick appropriately in the market.
Well, do you think also, Kelly, that we're finally getting away from the notion that the only thing that matters is whether the Fed raises rates or not?
I do, Jim. Look, this whole thing about the exact second that the Fed is going to raise rates has been so overblown, in my personal view. I mean, first of all, we should raise rates because we have crisis rates and we're not in a crisis. But if you raise rates a quarter, a half, or 3/4, it can't do any harm, can only do a little good. Nobody is not borrowing money today because rates are too high, right? I mean, you could raise rates a lot, and it's not going to stop somebody from investing in something that makes sense. If you raise rates, savers will have a little more money to spend, so it'll be stimulative. So, I think the practical business person is just not worrying about when they're going to raise rates. They're just trying to run their business.
Well, it does seem from your footprint that in your area, people want to borrow more, you're lending more. Is some of this because of regulatory environment no longer being as critical, or is it because of optimism and a belief that if you borrow money and build, you'll make more money than if you didn't?
I think it's the latter, Jim. I think that there hasn't really been a change in the last several quarters with regard to regulatory constraints. That is still constraining, but it's not substantially constraining that it will stop people from making investments. What's really happening is people are finding that they need to invest. You know, we've been in 8 to 9 years where people have not made investments in fundamental infrastructure, buildings, equipment, rolling stock. And even though you may not still feel great in terms of optimism, at some point, the trucks are just running off the road. You have to replace them. And so I think people are saying, okay, I'm just tired of waiting. I'm tired of feeling negative. I'm turning a little positive. I'm just going to go ahead and invest. And that's spilling over into borrowing.
Should we be concerned at all at one point in the conference call, because commercial industrial loan growth was off the charts, that's how strong it was, that you say it's going to moderate a little in the fourth quarter? Is that a sign of weakening in the U.S., or is that just seasonal and we should expect that?
Yeah, it's just seasonal with us. So we have a very strong third quarter because we have a number of seasonal businesses that grow really fast, like insurance premium finance. We finance a lot of all-terrain vehicles, jet skis, that kind of thing. So that was seasonally up. So our seasonality impact will go away, so we'll see some softening in the fourth. But that has nothing to do with the underlying economy. We think the underlying economy is growing at about 2%. It's going to continue to grow about 2 to 2.5%. It's not wonderful, but it's not bad. And so we look forward to the remainder of this year and next year at about the same steady pace that we're operating at today.
One last question. Why were you the only major bank that actually took advantage of this period and snapped up other companies in other regions that you're now filling in? Because it's clear from this quarter that it was definitely the right strategy to take.
Yeah, we decided several years ago, Jim, to make all of the necessary investments in our backroom, our infrastructure, our governance, really, frankly, the requirements that the regulators have imposed, appropriately so, on institutions to be able to be in a position to acquire. So the regulators, I think, will clearly tell you it's not about the acquiree, it's about the acquirer. And so if the acquirer has made the investments and has taken a positive attitude with regard to doing so, and the regulators acknowledge that, which they have in our case, then they're quite ready for institutions to be acquiring. I can't speak for my peer leaders, but I would just say from our point of view, we have felt clearly that we've done the work. We're in the right position to be able to make acquisitions. We've clearly done it, and they've been approved. I think they'll be approved in the future.
Right.
But we do have to continue to invest in the infrastructure to make sure that our risk management systems are okay.
Well, anyway, congratulations. Terrific quarter. Your stock deserved to go up. It wasn't just some sort of ETF that took it up. Kelly King, Chairman, CEO of BB&T Corp. Good to see you, sir.
Thanks. Good to see you, Jim. Have a great day.
Bank rallies for real. Mad Money's back into the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.